Hello viewers, we'll be going over gold futures. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for gold futures. So back to the technical analysis, gold is currently down 22 basis points on the 1-hour chart. We have now approached the negative MACD, and we're nearing oversold RSI, and at the moment we have found temporary support on the 200 moving average. We may very soon break below that level. And as for the 4-hour chart, we found also temporary support on the 50-day moving average, this yellow line. And again, we also will break that level as well. And we also see a divergence on Wednesday, and we may see gold futures continue to fall into Friday and as well as Thursday. And on the daily chart for gold futures, we have it making higher highs since last week, but there is some bit of exhaustion based from what we saw on the daily MACD. We are starting to see a divergence. So if we do manage to fall lower, the next possible support will be the 18-day moving average, this purple line. And reason why that coincides with previous resistance level, and since we're above resistance, that now act as our support. And again, that price support level is around $1,756. And as for resistance, if we do manage to climb higher, we made an attempt to close but reverse on, I say, Wednesday, and there's possible resistance around $1,807. So if we do manage to reverse higher to hit that resistance level, that price movement to the upside is roughly around 1.9%, and to hit the next support level, that price movement to the downside is roughly around 11 or 1.11%. So now let's head back to the day-by-day probability model. Again, these models are now available in the link below, so do check it out. So one thing to note, we only have 2 models found, and the sample size is small, so it is not statistically significant, so do keep that in mind. So as we progress to the 7th day, we have a 50% chance for gold futures to fall between 0 to, say, 1%. And further down to extreme case, we have a 50% chance for gold to fall further between -1% to -1.8%. So now let's head to the day-by-day forecast for gold futures. So as we progress to the first day, that will be a, say, Thursday, and 2 days out will be a Friday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue line is our current trend, and overlapping it happens to be the best match. And again, right here we have our current trend, and below is the trend that we found on the line graph, and this trend dates back to February 9 to May 5th, 2016. So let's begin comparing both trends. So on the current trend, we start off averaging above the middle Bollinger Band, see sideways price action, and then we proceeded to touch the bottom band, and then towards the very end we touch the upper Bollinger Band. And now in the trend in question, we average above the middle Bollinger Band, and then we see sideways action, and then proceeded to touch the bottom band, and then towards the very end we touch the upper Bollinger Band. So what we have here is 1, 2, 3 points. And we also have 1, 2, 3 points on the current trend, so there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly same. So the model that we just examined was February 9th to May 5th, 2016. Back then, gold futures was down roughly around 25 basis points, so not much to the downside. And if we head back to the day-by-day probability model, that coincides with this standard deviation of 50% chance between 0 to 1% in the next coming days. And let's examine closer on the technical performance of each trend. So on the current trend that we're in, we're only down 45 basis points from monthly high, up 7% from monthly low, up 57 basis points from 10 simple moving average, up 1.8% from 20-day simple moving average, and up 2.5% from 50-day simple moving average. So now let's compare that to the trend in question. So back then, gold future was down 1.3% from monthly high, up 6% from monthly low, up 94 basis points from 10 simple moving average, up 1.8% from 20-day simple moving average, and up 2.5% from 50-day simple moving average. So among the two trends that we're comparing, there are technical similarities. So again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.